Today, I want to talk to you about one of the most underutilized tax deductions that is missed by many business owners: car and truck expenses. Now, there are two different methods for claiming car and truck expenses. First method is the actual method. Second method is standard mileage rate. Now, the IRS just recently increased the standard mileage rate. If you want to learn about this new rate increase and how to properly use it so you don't leave money on the table, watch this video until the end. Welcome to the Finance Robo Show. I'm Kamar Ellis, your host. The Finance Robo Show is all about money, right? We talk about money, taxes, stocks, business, economics, entrepreneurialism, really with the whole aim of the average everyday person getting a piece of the American pie. And today, that's really going to be key because we have a lot of business owners who miss out on this tax deduction, but it's a deduction that many of us use, but we just happen to glance over it for some odd reason. Now, in all my years of being a tax accountant, I could probably count on one hand the times that I've gotten every single expense from a business owner that they were going to claim on their tax return, right? And what normally happens is people don't take good record keeping, but I'm not going to belabor that point because I talk about that enough on this channel. But again, I want to say again, record keeping, bookkeeping, accounting records are really the keys to great wealth. Being organized is really a key to wealth, but I don't want to go on to a rant. Today, we're going to talk about the new standard mileage rate increase from the IRS, right? Since gas prices have been astronomical and through the roof, more than $6 per gallon in some places in the United States, I know I'm paying about $5.20-ish per gallon and to fill up my car. The IRS had a good heart and said Christmas is coming early. So we're going to give all you business owners a little treat by increasing the standard mileage rate. Now, this doesn't go into effect until July 1, 2022. So from January 1 until June 30 of 2022, the standard mileage rate is going to be 58.5 cents. Again, 58.5 cents. As of July 1st, 2022, that rate goes up by 4 cents to $62 cents, 62.5 cents to be precise. Now, as I've said before, there's two ways to write off car and truck expenses, and I want to go over them real quick. There's a lot of intricacies. You can go into a lot of different ways with this, but on the surface, there are two different ways. You have your actual expenses and you have your standard mileage rate. Now, your actual expenses is a bit more tedious because they want you to keep really good records of every last expense that you use to operate your vehicle in the place of it being in business, right? In order to keep your vehicle in business. It could be a car, it could be a pickup truck, it could be an SUV, but whatever vehicle you use to keep in service for helping your business make money, they want you to keep accurate records, meaning that every time you get an oil change, you should have a receipt for it. Every time you get new tires, you should have a receipt for it. Every time you get spark plug, well, they even change spark plugs anymore. I don't know. I may be showing my age. But anytime you get anything done on your car and the maintenance of your car and keeping it in service, they want it to be notated and recorded. You might hear a term called substantiated, which basically means having good receipts or having the receipts so you can prove to them to an IRS auditor if they ever come knocking. So you have your actual expense, right? Again, you're taking note and recording everything that you spend on keeping this car in service. Tolls, registration, insurance, so forth and so on. Now, the IRS knows it's going to be a little bit tedious on business owners, right? So they give you an out. You can then do what's called standard mileage rate, okay? Now, the standard mileage rate is the miles that you drive your vehicle for doing business. Now, little caveat here. It is not for when you are commuting. And so give you a quick example of what commuting is. Commuting is leaving, let's say, your home and going to your office, right? If your office is outside of your home. But let's say you're home and your office is 5 miles away. So those miles going and coming each day, and let's say you go every day out of the week, you drive 5 miles to the office and then 5 miles back home. That's 10 miles daily in commuter miles. Now, if you drive from home to the office and then out to, say, a customer or client, the miles from your office to your customer or client would then be considered business miles. So you got to be really careful about that. I see a lot of people get confused by that. So the standard mileage rate, again, is going up to 62.5, right? 62.5 cents per mile. So those miles can begin to add up. But not only do you get to write off your 62.5, right, you also get to write off other things when it comes to operating your car and vehicle. So in the case of standard mileage, in the standard mileage rate, you get to write off the like I said, the 58.5 cents per mile up until June 30th, right? So when using the standard mileage rate, that factors in everything except parking, tolls, car loan interest, right? If you have a car loan on your vehicle, on your business vehicle, and it also will allow you to write off state and local taxes as well. Now, again, tabulating mileage can be a bit more simple. So now that you know that the rates are going to change kind of mid-year, it gets a little bit funky from the bookkeeping, right? So again, from January 1st, 2022 to June 30th, 2022, the mileage rate is 58.5 cents per mile, okay? Now, the second half, January 1st, 2022 to December 31st, 2022, the mileage rate goes up by 4 cents to 62.5 cents per mile. Now, what are you going to have to do? You're going to have to keep some good books. You're going to have to record that January to the end of June, and then you're going to have to then switch over and calculate that July through December 31st time periods that you have to track. Now, here's a quick example, right? So let's say you drive 10,000 miles in the first half of the year. That will give you a tax deduction of $5,850. And then let's say you drive 10,000 miles in the second half of the year. That'll give you a tax deduction for $6,250. So your tax deduction for the year would be $12,100, right? Normally it would have been $11,700 if they hadn't increased the prices, but they did. They did increase the prices. So now you get the benefit from this. Now, again, like I said before in the beginning of this video, many people miss out on this because they don't keep adequate records. I can't tell you, there's not too many times where I get to ask my clients to supply those informations without me kind of haranguing them a little bit and trying to figure out what it is. But one of the best ways to keep track of your mileage is 2 apps. Now, you can do the old-fashioned way too. A good pencil, black and white notebook, that can work as well. I wouldn't recommend it. What I would recommend is 2 apps. 2 apps, Mileage IQ being one of them. It's an app strictly for tracking mileage on your cell phone, Android and or iOS for your Apple lovers. Count me in the fray there. And you can track it and it'll automatically track. And then what you can do is you go back and you can say, this is for personal and this is for business. This is commuter, this is for business, right? So you can tabulate it and it'll create a nice, pretty report that you can have for your record so you can do what? Substantiate. We learned that word today. Substantiate and show the IRS that you have receipts to back up your claims for driving these miles, okay? That's one app. The second app is an app I use, QuickBooks. So anytime you use QuickBooks, you can download the app, put it on your phone, again, Android or iOS, and it will track your miles for you. Now, I would suggest doing one of those. Either one works just fine, just so you can keep track of it. Like, now, here's a major red flag. This is a major key. The IRS knows that people don't like to keep good book records. So, God forbid you are ever pulled up in an audit one of the first things they are going to attack is your mileage log. Or if you do actual expenses, they're going to want to see your receipts. They want to see all your receipts, and they're going to say, hey, you just made this number up. You just dreamt this number up. You don't actually you are actually not able to substantiate your claims of all this money that you're reporting on your tax return. All right. So it's super duper important that you're able to back up all the claims that you put on your tax return, right? Bring your receipts, bring your logs, so you can show that, hey, I didn't make these up. I actually did do these things. Okay. So that's one thing I want you all to keep in mind as it relates to your bookkeeping and keeping a good business. Okay. Again, I see people miss out on this all the time. Please keep meticulous records, especially as interest rates, gas rates, real estate prices go up. We're going to see the stock market doing all kinds of crazy things. And as a result of that, we might see some more IRS changes. So stay alert, stay up to date, like and follow this channel if you like me, if you appreciate this. And I'll be back with some more. Question of the day. Did you claim car and truck expenses on your tax return, on your business taxes? Comment below and let me know what you had.